Good afternoon and welcome to the webinar, What Self-Employed Individuals in DC Need to Know About Paid Family Leave. My name is Christine Kulamani and I'm a staff attorney at the Nonprofit and Small Business Legal Assistance Programs at the DC Bar Pro Bono Center. Today's webinar will cover paid family leave and what self-employed individuals in DC need to know about this new program, including information about who is eligible, how to opt in, when to opt in, and rules for participation. I am joined today by staff from the DC Department of Employment Services Office of Paid Family Leave, Program Analyst Michael Henderson, and Policy Analyst Elliot Skur. Thank you for joining us today. Before we begin, just a couple of housekeeping matters. First, this webinar will be recorded. After the webinar, you will receive an email with the link to the recording. However, the presentation slides will not be available as a standalone download. Next, for those listening to this webinar live, you may submit questions through the questions box in the webinar control panel on the right side of your screen throughout the presentation. At the end of the presentation, we will try to answer as many questions as we are able in the time that we have left. There is also a self-employed individuals frequently asked questions sheet from the Office of Paid Family Leave available to you by clicking on the Handouts tab on the webinar control panel on your screen. And now, I'll turn it over to Michael and Elliot from the Office of Paid Family Leave. Thank you again and welcome.
Thank you. Again, we appreciate the opportunity to speak with you regarding the new district's paid family leave program. As I said, my name is Michael Henderson, a program analyst, and we're going to give you an overview of the program and spend a good portion of the time asking your questions. That's the primary goal here today, is to engage with you, to provide information and receive your feedback. So very quickly, a very high-level overview of the district's paid family leave program. So the law was passed back in 2017 for the Paid Leave Act, and it has two primary milestones. The first passed earlier this year on July 1st, 2019, when the program began to collect taxes to fund the paid leave benefit, which will be administered beginning July 1st of 2020. This program includes three different types of leave that are available. As you see here on your screen, that includes up to 8 weeks for parental leave, 6 weeks for family leave, and up to 2 weeks for personal medical leave for your own serious health condition. Now, since we're talking specifically about self-employed individuals, we want to talk to you about the types of individuals that fit this classification for the purposes of our program. So this includes sole proprietors, independent contractors, and members of partnerships. But it's very important that you remember, for the purposes of our program, to be deemed a self-employed individual, your income has to be reportable or reported to the IRS as self-employment income. So there may be individuals who are a sole proprietor who pay themselves a salary. You may be a W-2 employee for your own company, which means you would already be, for example, a covered employer in our system. So while you may be a sole proprietor and own your own business, our program would not necessarily treat you as a self-employed individual. So again, it is important to determine how your self-employment income or how your income is reported to the IRS. Then we're also going to look at how much does the program cost. So once you do opt into the program, again, just like our other covered employers, there's a 0.62% contribution rate, which is based off of the gross income that you earn as a self-employed individual when you opt into the program. And we're going to talk a little bit about the payment schedule. So the payment schedule for our program matches the contribution schedule for the other covered employers as they contribute to the Office of Unemployment Compensation. So what this means is, after the end of a calendar quarter, both covered employers and self-employed individuals will have a month to report their income and then process tax payments. So for example, the calendar quarter for Q1 is January, February, and March, with payments due by the end of April. And then the launch of our program was based off of calendar quarter 2 of this year, which was April, May, and June, with the initial payments and wages being reported due in July. Now, with self-employed individuals, their opt-in period began a bit later with July 1st, and we'll talk a little bit more later in the presentation, but their first contributions will be based off of Q3, which is July, August, and September.
Thank you, Michael. I'll jump in here to talk about benefits. My name is Elliot Skur. So benefits will first be paid to eligible individuals, including self-employed individuals who chose to opt in beginning in July 2020. All benefits are based on your reported income. There's not a standard benefit amount. It is based on your reported wages, which includes self-employment income. The important point about this for self-employed individuals is that only self-employed individuals who chose to opt in between now and September 28th will be eligible for benefits beginning July 1, 2020. Self-employed individuals who wait until the next open enrollment period, which is November 2020, will have to wait another full year before receiving any benefits under this program, which would be November 2021. So Michael already discussed some of the important responsibilities for self-employed individuals. We just want to lay it out here again. So the first task for self-employed individuals who want to participate in this program is to register with the Department of Employment Services. They can do so by following the links on our website, which will be posted at the end of this presentation, and to create an account with the Employer Self-Service Portal. Then the second responsibility is to report income quarterly and to pay the 0.62% tax on that income that is reported. So even if you're a self-employed individual and you have zero income in a particular quarter, you still have to report that you earned zero income. These are quarterly income reports. And again, the other important point about this is that you are reporting your gross self-employment income, not your net self-employment income. So this is unlike other taxes, which tax you on your net income, which is after you deduct costs and expenses. Unlike those tax programs, the Paid Family Leave Program assesses the 0.62% tax on your gross self-employment income before any expenses are deducted. So these are gross receipts. Finally, the third category of responsibility is to keep records. Most of these records are required under existing laws to comply with tax laws, but there are some additional pieces of information that we want self-employed individuals to keep about their income. The unique part is to keep records of where you performed work for which you are earning self-employment income. That is a very important aspect of this program because it is intended to cover people who spend a majority of their work time in the District of Columbia. In addition to the work location, you should keep basic records about the amount of income, the dates on which it was received, and any contracts and billings that you might have received, which are important ways for us to verify that you are in fact a self-employed individual. So as was mentioned previously, there are three times when an individual can opt in as a self-employed individual. The first is currently going on. We are in the first open enrollment period, which began on July 1st, 2019 and extends until almost the end of this month. It ends on September 28th of this month. The second open enrollment period will not be until 2020, in November and December 2020, and every November and December after 2020. There is also a third special provision for people who are newly self-employed. These people can opt into the program within 60 days of commencing their self-employment business. So when I mentioned that self-employed individuals who currently are operating self-employment business will not be able to opt in again until November 2020, that's true. But for people who are not currently self-employed, if they start a business in any time in the year 2020, they will be able to opt in within 60 days of that time. So when you choose to opt in, there are certain documents that you'll need to share with the Department of Employment Services just to show that you are, in fact, a self-employed individual. And this can be a range of documents. This is not an exhaustive list that you see on your screen now, but it could include things such as contracts to do work in the District of Columbia, tax documents from previous tax years showing that you have self-employment income, billings or payments, or just documents demonstrating that work was performed. We will accept a range of documents, but there needs to be something to show that you are an active self-employed individual. So once you're opted in, you are allowed to choose to leave the program because, again, this is a voluntary program. You can only opt out during open enrollment period. So the first time that you would be eligible to opt out would be November or December 2020. There are special provisions for individuals who may stop being self-employed, either because they were employed under a traditional employment arrangement, they ended their self-employment business, they retired, they moved out of the District of Columbia region. Any of those reasons would be eligible for this other provision, which allows you to just be removed from the program. You don't have to wait till the open enrollment period. Just some additional special rules to keep in mind. There are a number of provisions to prevent churning in and out of the program. So again, this is a voluntary program, but there are some special rules to prevent individuals from opting in, claiming benefits, opting right out, opting in again, and so on. One of those rules is called a 5-year bar, which means that after you have chosen to not participate in the program twice, which includes not participating now up until September 28th and opting out at another period, you will not be able to opt in for another 5 years. So that's known as the 5-year rule. There are additional consequences for not filing quarterly income reports. And the main consequence is that you will not be eligible for benefits until you have reported your income and submitted wages and paid the tax based on that income.
Additionally, we wanted to talk about some things that we wanted to make sure that interested individuals are aware of. As Elliot covered a bit before, this program is based on an individual's gross income and not their net income. So that's something we always want to make sure that we highlight for individuals that are looking to opt into the program. Another important point is that this counts for all self-employment that you conduct, so not a single business. So when you opt in as an individual and not as a single business. So again, an important reminder: all of your reportable self-employment income would be reported to this program as part of your contributions. Again, the definition of self-employment income matches that which is included in the IRS's definition. So we look at self-employment based on how you report your income to the IRS. We want to make sure that you stay informed. So on your screen here, you see some of the important links and details about our program. Our website, which is dcpaidfamilyleave.dc.gov, is going to be one of your best resources for receiving information about PFL, staying up to date with events and activities in relation to our implementation, and also a way for you to provide feedback to us. Pretty soon we're going to have some additional materials for self-employed individuals in particular, as well as an employee handbook to help guide you through the application process, registration, and other important details about accessing the paid leave benefit. Feel free to reach out to us via email at dos.opfl@dc.gov or by phone at 202-899-3700, and please engage with us at our social media handles indicated below. At this time, we'd like to move on to our live question and answer portion of today's presentation.
And as a reminder to our listeners today, you can submit questions through the questions box on the webinar dashboard towards the right-hand side of your screen. We have a few questions coming in already. First, will someone be eligible for benefits if they ever have a $0 of income reported?
You're only eligible for benefits if you are eligible for at least $1 of weekly benefits. So not if you have reported zero income for 5 entire calendar quarters. If you've reported zero income for 5 entire calendar quarters, you would not be eligible for any paid leave benefit. But if you have reported income for at least 1 quarter in the past 5 calendar quarters, so that's about 15 months in the past, then you would be eligible for at least some benefits. This is important for self-employed individuals, some of whom might receive all or most of their income in 1 single calendar quarter, and that's fine. You could report an entire year's worth of income if you truly do receive that all in, let's say, January for work performed in the entire year. You would just report everything you received in 1 quarter, pay the 0.62% tax in that quarter, and then you would report 4 more quarters of zeros, and that's fine. We would just take that quarter and divide it by 52 weeks to get your average weekly wage over the course of an entire year. So you don't have to report positive income every quarter in order to receive benefits, but you do have to have positive income in 1 of the past 5 calendar quarters.
Right. Is the requirement that at least 50% of work be performed in the district assessed at a daily level, a weekly, the quarterly reporting period, or is there some other measure that it is averaged out over?
The 50% work requirement is assessed on a quarterly basis. So when you are submitting your quarterly reports, essentially you are affirming or attesting to the fact that you completed that work at least half or more than half of the time in the District of Columbia. So yes, it is assessed on a quarterly basis.
If a self-employed individual's work in the district fluctuates, maybe seasonally, and they had a quarter where they are not working 50% of their time in the district, maybe 49%, would they then become ineligible for benefits just for that 1 quarter?
It wouldn't affect your benefit eligibility, but you just would not report income for that quarter.
Great. Is it possible for a small business owner to both be self-employed and their business be a covered employer under traditional paid family leave benefits?
Yes, there may be a number of situations where a small employer may already have registered with the Office of Unemployment Compensation because they have employees on their payroll, so they're already contributing on behalf of those employees, but they may not be reporting their own income because that might be reported to the IRS as self-employment income. So in that situation, you may have an employer who has to register twice because they'll already be registered for the purposes of the UI program for their employees, and then they would register a separate account in order to report their self-employment income and receive benefits themselves. So yes, it is possible effectively for an employer to be registered twice. But again, that would only be in the case where the owner is reporting their income to the IRS as self-employed income, and they also have employees that they report for the UI program.
Similarly, is it possible for a self-employed individual to opt into the program if they are also covered by their employer for traditional non-self-employed income?
So yes, you could be a covered employee for a covered employer and also then register yourself as a self-employed individual. And what we would do is combine both your covered wages and your self-employment income to determine what your total income or wages would be, so that you wouldn't get double payments when you actually applied for benefits. It would just potentially increase your weekly benefit amount because we would pool all of your earnings to determine what your average weekly wage is. and then that would determine your weekly benefit amount. But again, the cap on the weekly benefit amount is $1,000 beginning in 2020.
Okay. If a self-employed individual, are they only reporting their income that is earned in the district or their total self-employed income?
So you would report your total self-employment income if it was earned more than 50% of the time in the district. So even income that you earn outside the district, as long as 50% of the entire work was performed in the district. So the 50% rule applies to see whether you are eligible to report for that quarter. And once you've met that threshold, then you report 100%. So you're not trying to parse out how much to report. You're just reporting all of it if you perform more than 50% of your entire self-employment work in the district in a particular quarter.
Okay. And we have a clarifying question. If there is a self-employed individual that works from DC doing work with clients outside of the district, is that counted as DC-based work?
Yes. So again, because the program is primarily looking at where you are physically performing the work. So if you are working remotely, but I guess not necessarily remotely, but if you are working for a client who's based somewhere else, but you are performing the work here in the district, then that would be considered covered work.
And to be clear, there is no residency requirement. You can live in Maryland or Virginia so long as at least 50% of the work is performed in DC?
That is correct. There is no residency requirement. The program is based on location of work, regardless of where an individual lives.
Okay. Are there resources to help small business owners determine if they're self-employed?
So the primary test of whether you have self-employment income is whether you file Schedule SE, that stands for self-employment, with the IRS along with your taxes. So after you've completed a year of work and it's now tax time, you would report your gross self-employment income on Schedule C or Schedule K, and then you would transfer the amount to Schedule SE. If you file Schedule SE, then you are a self-employed individual. That's what we're looking at to determine self-employment.
Okay. If there is an individual that isn't self-employed right now, but they will be soon, maybe within the next couple of months, and they opt in before the end of 2019, will they be eligible for benefits beginning in July of 2020?
So that individual would fall into that third category of enrollment that Elliot covered. So, because again, in order to opt in, you had to have commenced your self-employment. So you had to have received some income as a self-employed individual. So that if they're a brand new self-employed individual, they don't have to enroll before the end of 2019, because again, they will be able to opt in the first 60 days after they have commenced business. So that could be in January, that could be in March or April, as long as they have some verification, some documents that support that they began self-employment income, they received income, self-employed work and received income. That will be used to determine effectively when their liability status is started. So they don't need to opt in before they actually begin commencing business, because when you go to opt into our program, you're going to have to provide the documentation that Elliot covered as proof of your self-employment income. So if you haven't actually begun to do the work, you would not be able to register. But it's all right. There's a special category for enrollment that does cover new self-employed individuals that is not time-based in terms of our other open enrollment periods, because they have their own special open enrollment window.
And the second part of that question about benefits, yes, you would be eligible for benefits beginning July 1, 2020, even if you opted in after September 28th as long as you were not self-employed before. So if you are truly starting a brand new self-employment business, anytime after now through the future, you would be eligible for benefits on July 1, 2020, or if it's after July 1, 2020, you would be eligible for benefits as soon as the quarter following the one that you commenced self-employment business.
And now we have a couple of questions about the documentation to prove eligibility. You provided a list that was non-inclusive. Are there some documents that are better or easier to show eligibility than others?
So there's no general rule about this, but a contract to do work, a past year's tax document would be very strong proof and would probably be sufficient on their own. Other things, such as billing documents and payments received, we might need more of them. So it's more of a quantity thing, just to show that there is a pattern of self-employment. So yes, so there are some documents that are stronger, but if you just submit multiple documents, that's probably sufficient too. So there's no general rule, but if you are truly self-employed, then you likely either have a strong document, such as a contract to do work, and documents showing that you've actually received income. That would be kind of a combination. Or if you have a past year's tax document showing Schedule C income. So I can't provide a specific a combination of documents that would be ultimate proof. But if you are self-employed, then you would have some combination of these documents that would be sufficient proof.
Okay. How long should a self-employed individual that has opted into the program keep their records of work location, amount of income, dates of income received, and any contracts or billings for purposes of the paid family leave program specifically?
So we indicate that self-employed individuals want to retain their documentation, their records, for a period of at least 3 years, so that if there are any concerns or questions about income that was earned or reported, the agency may request to receive or review that information, but the required period is 3 years.
Okay. And we have another clarifying question about net versus gross income. The listener would like to make sure that you mean that they submit a report on the profit they are making, not just gross. Can you both, talk about that a little bit more, the gross versus net income and what you're looking for in the report?
Right. So when we said gross, we meant gross, which includes all receipts. That's before any deductions for expenses. So this is unusual as far as taxes go. Most taxes are assessed on the net, which is profit. This program is different. The tax is assessed on gross receipts. So if you have a food truck business and you purchase a food truck and you earn gross receipts that just cover the cost of the food truck, but does not show any profit, you would still report the full gross receipts that you received, even though you had zero profit. This is an unusual structure. It's in the law. One rationale for it could be that the council intended for benefits to be higher, since gross is higher than net. But that's the situation that we're in. So we did mean gross, which is total receipts.
Thank you. If a self-employed individual makes an error in their reported income in their quarterly report, can it be corrected?
So yes, self-employed individuals do have the ability to amend their quarterly reports of income. Generally speaking, if there is an amendment, there may be a workflow, but that is triggered on the agency side. That will depend on whether or not you are increasing your wages or decreasing your wages, or rather increasing your income or decreasing your income. But yes, self-employed individuals do have the ability, after they have reported and or processed payment, to go back and amend their wage reports. I believe we have a period of at least a year with which you can go back and amend, but we can definitely follow up with that in more detail a bit later.
Thank you. In the presentation, you talked about some of the penalties for late reporting. For late payment of the 0.62% tax, is there a percentage or dollar amount in financial penalties?
So yes, with our program, if you fail to process payment within the 30 days following the end of a calendar quarter, the program will assess a flat penalty of $100 or 10% of your reported income, whichever is higher. And then there will also be a 1.5% interest penalty for that amount, or for the wages that are reported as well.
Okay. We have another follow-up clarifying question about the income that should be reported on the quarterly reports. If there's an individual with an LLC and they file a Schedule C, but they only pay themselves twice a month, do they report their personal gross income that they pay to themselves, or the LLC's gross income?
So it would depend on the nature of the compensation. So if they pay themselves in a form that is reportable as a W-2, in other words, if they have structured their business such that they are an employee of their own LLC, then that person is already participating in the program because it's mandatory for W-2 workers. If they are just distributing shares twice a month that are not reportable as W-2, but are actually they're distributing a portion of the profit, then it's whatever is reported on Schedule K or Schedule C. So if they're only distributing a share and that is what they are reporting to the IRS as their self-employment income from that LLC, then yes, it would just be that portion that they are distributing to themselves. If somehow they've structured it in a corporate structure so that the remaining profit stays with the corporation. But again, we would just look at, first of all, if you are reporting income on Schedule SE, and if so, then it would be that income that is reportable on Schedule C and SE. If you don't have income that is reportable on Schedule C and SE, then you are a wage and salary employee of your own firm, and you would, first of all, not be eligible to opt into the program because you would already be participating in the program.
Thanks for explaining that.
Sure.
Is it possible for a self-employed individual to opt in and file their reports by paper, hard copy, as opposed to through the internet?
Yes, we do provide a method for both our covered employers and our self-employed individuals to report their wages and process payments via paper. So you could file wages via paper or file income via paper, and also process your payments via check if you so chose.
Okay. What resources are there for individuals looking for more information on utilizing the benefits? You'd said that there's more information coming soon. Where can they keep an eye out for that information at?
The best location for information about the Paid Family Leave program is going to be DC Paid Family Leave. pay.dc.gov. So there is a resource section on this page, and there will also be some additions added for a separate section or page, particularly for self-employed individuals. So we're looking to develop some additional materials. So right now, for example, there is an employer toolkit, which does have some very basic information for the program overall, but we're going to have an employee handbook, and eventually there will be some additional materials just for self-employed individuals as well. You can also view recordings of our previous webinars, upcoming webinars. We're going to continue to develop our frequently asked questions on the website, and there will be some additional materials, again, whether it be a one-page info sheet or maybe even a additional toolkit or handbook just for self-employed individuals. An important reminder, these documents are available in multiple languages if language access is a concern as well.
And I would just add that, as Michael noted, the website is the best place. And going back to the previous question, I just wanted to confirm, but I did find if you go to the website that's on your screen now and click on resources, there is a tab for self-employed individuals, which has the opt-in paper form that you can fill out and mail to us. There is a frequently asked questions sheet for self-employed individuals and other documents there that you might find helpful.
Thank you. So that's all of the questions that we received. If listeners have any more questions, please send them in now. We'll wait just a minute for those. Okay, that looks like that is the end of the question and answer period. Thank you so much to the Office of Paid Family Leave for discussing paid family leave for self-employed individuals with us today. Michael and Elliot, do you have any final comments?
So I just wanted to say, if there were any questions that were not answered today, or if there's any additional clarification needed, please feel free to reach out to us once again, either by phone or by email. Also, additional reminder, our public comment period for our proposed benefit regulations did just close this past Monday. However, we still welcome any and all comments about our program's implementation, including our regulations, which were posted recently. And keep an eye out, because we will be posting a matrix or a summarization of the comments that were received, and they'll be available on our website as well. But again, thank you once again for the opportunity to talk to you about paid family leave.
And thank you both, and thank you to all of our attendees for listening in to our webinar today. Please keep an eye out for an email with a survey on this webinar, as well as a link to the recorded version of this for later viewing. For information on the DC Bar Pro Bono Center's upcoming events and helpful legal information for small businesses and nonprofits, visit lawhelp.org/DC/CED. That is lawhelp.org/DC/CED. Thank you again for listening, and have a wonderful afternoon.